Welcome back, beautiful tri-state area. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. I'm your host, Zen Sams. We're live from the iconic iHeart headquarters, and today on the WOR CEO Spotlight in the Expert on the Microphone series, we're diving into the mindset of a CEO who's steering one of the most dynamic firms in the financial world. Sagar Sheth is the CEO of Roth Capital Partners, known for spotting early trends and navigating market shifts with confidence. Today, we're going to dive into the hottest trends shaking up the financial world right now, from the return of the retail investor to the big question, is the IPO market finally ready to roar back in 2025? We're also going to be breaking down the small cap comeback as investors set their sights on new growth opportunities. And of course, we're going to be exploring all of the recent impact of the trade policies. Now, the U.S. economy is being rebooted with aggressive tactics, and it's heading into uncertain waters. But we're here to break it all down for you. Don't want to miss this powerhouse conversation. Now we're going to unlock the mind of a CEO leading the charge. Welcome to the show, superstar.
Oh, thank you so much. Love that energy.
Let's chat from the very beginning, from analyst to basically architect. Let's chat your journey. So your career spans institutions like UBS, Deutsche Bank, and Morgan Stanley before ultimately stepping into the role of CEO, first at MKM Partners and now at Roth Capital Partners after the 2023 acquisition. Now, in a world where leadership trajectories are rarely linear, your journey is both impressive and instructive. So what was that pivotal moment in your career that shifted your path toward becoming a CEO, and what core philosophy carried you through to the top of the finance world, essentially?
Yeah, well, first of all, thank you for that kind recap. And, in the spirit of humility, I still remember what it was like to be 22 years old and just try to get my first job on Wall Street. And admittedly, if life had ended right after that and I got the job on Wall Street, I thought that was success. So anything that happened after that is sort of icing on the cake. And, believe it or not, that's almost a little bit of the spirit of the philosophy here, is that a lot of people can work hard, and sometimes timing, good fortune, and fate have a lot to do with it. So I want to thank the powers above for having those things align for me in my journey. But a couple things. I bring up the 22-year-old because, quite frankly, my eyes are on the younger generation these days. And when I think about their rise in corporate America and what they need to do to navigate these markets and to actually create opportunities for themselves, that's actually almost more important to me than my journey in itself. But one thing that hasn't changed is having a seat at the table, knowing how valuable that seat can be. And one of the philosophies that's helped me to answer your question would be make the most of the seat that you have. Excel at that seat. Make that seat larger than life. Take advantage of the opportunities that you can get from having that seat. And then, quite frankly, be ready to lose it all. So one of the things I'm ready for, I hope this doesn't happen tomorrow, but if it does, if I got fired tomorrow, quite frankly, if I don't operate like that, how successful of a CEO am I going to be? I'm going to make decisions that only keep me employed. So quite frankly, I'm always ready to just be let go tomorrow. And you know what that's going to happen for today, what that's going to do today? I'm going to make the best decisions I can for my employees because I'm going to want to be remembered by something. So I'd say value the seat and be ready to lose it. And quite frankly, those two philosophies have helped a lot in my journey.
Wow, that's powerful.
Thank
wow,
you. Yeah.
Especially in an industry that doesn't often allow for reflection. It's clear your journey hasn't been about checking boxes, but about building value across every rung of the ladder. And I love that about you. So which brings me to my next question, leading through economic whiplash. So we're living in a time of wild economic crosswinds, inflation pressures, rate cuts on the horizon, and it's uncertainty across global markets. Leadership under these conditions is a different beast, and it requires constant recalibration. So how are you approaching leadership in such a turbulent financial landscape? And what mindset do you believe is non-negotiable for CEOs navigating today's economy?
Everybody out there, don't forget to learn about history, because history is like one of the best ways we can prepare for the future. But quite frankly, the way I kind of see our firm right now is the firm should be set up where, despite what the volatility is, despite what happens, are we going to have a business line that wins? In a funny way, I hate to use this analogy, it's like a casino. The casino tends to win no matter what. They win 51% of the time. The casino's set up that if the slot machines don't work, maybe the blackjack table is going to work. Maybe the roulette table will work. Sometimes hedge funds, mutual funds, investment banks, we have a similar philosophy where there are parts of the house that are going to win.
Now let's talk about the return of the retail investors. So retail investors are back and in a big way.
Yeah.
After cooling off post 2021, they're re-entering the chat with confidence, especially in sectors like AI and biotech and EVs. And according to Vanda Research, retail trading volume is now flirting with its meme stock era highs.
Yeah.
Roth sits at quite a unique intersection of retail and institutional energy. So how is Roth Capital Partners navigating this convergence of retail and institutional influence? And where do you see smart money, quote unquote, moving as we head deeper into 2025?
Roth Capital in particular, our clients are hedge funds, mutual funds, pension plans. We don't necessarily service retail directly, but we certainly have our eye on that pool of capital. So, when I think about the market, I try to split it up into a few categories. And whether you call it smart money or just money, I think a lot of the money's smart out there at this point. Everybody's money's smart, in my opinion. So hedge funds, mutual funds, pension plans, sovereign wealth, family offices, retail. I've got my eye on each one of those segments. The one thing I'd say about retail that's probably different than 10 or 20 years ago is the amount of information and tools that retail investors have today. You cannot ignore that. So stocks can move. They can work together to move things. We've seen the social media forums, X and Reddit, where there could be a lively discussion that can actually move a stock, and you can't ignore that. So I think retail money is smarter than it's ever been before, and I think there can be a lot of conviction and everyone searching for opportunities in this volatility that we had.
Yeah, it's fascinating because retail investors, come to think of it, they're no longer just noise, they're a signal. And the firms that adapt to that new power structure will without a doubt lead the next generation of capital markets.
And I'd say one other thing is that, and you and I talked about this earlier, it's just think of how easy it is to access the market in 2025. Everybody can trade on their cell phone now, all over the world. So this retail trend isn't just something in the U.S. One of the fastest growing segments in other countries, emerging markets, is the idea that anybody can open a retail brokerage account on your cell phone and start trading stocks a little bit at a time. That adds up very quickly. So we're well aware of that at Roth. And when we try to analyze market movement, we factor retail in as a huge component of our analysis.
Yeah, that's a great point. Now let's chat IPOs on the horizon. Is the window reopening is the big question. So after a 2-year IPO drought, the market seems to be thawing. Stripe, Databricks, and Reddit have reignited the public market conversation, and many are calling 2025 the year of the reawakening. But successful IPOs really just depend on timing. You know this, macro alignment, and really investor appetite. So from Roth's perspective, what needs to align for, per se, Roth-backed companies to step into the public arena again? And do you think that the IPO window is truly reopening in 2025?
The story and the companies haven't changed. The question is the timing right now? And clearly with this volatility, it might not be. And that's for good reason. Think about it this way. If you were a publicly traded company yesterday, your stock could move down, up or down 10%, and it would have nothing to do with the fundamentals of your company. So if you're a private company waiting to go public, is that the time to go? So I think the two most important things we need to see in order for that pipeline to really come back is, number one, we need to see some stability in the markets. We can't have this type of movement, not for that particular asset, which is the IPOs. Yeah. And then two, volatility. And then if I was a management team navigating a publicly traded company, those are the two things that I would look for to get comfort before I go into the markets.
That's why you do what you do. You paint a realistic yet optimistic picture, and it's clear Roth isn't just watching the window, it's positioning companies to walk through it when the timing is right. So I love that. Now let's, keeping timing, no pun intended, we could talk about this all day, but let's talk small cap comeback, opportunity or mirage, right? So the small cap stocks have underperformed large caps for the better part of the last 2 years, but that might be shifting with the Fed signaling all these, potential rate cuts and inflation cooling. We are seeing renewed interest in growth plays and small cap equities. I mean, the Russell 2000 is gaining traction. Where does Roth stand on small cap equities right now? Are there specific sectors you believe are poised to explode, and where are investors still getting it wrong?
I believe there are probably fundamentally sound companies within the small cap universe that are getting no attention from Wall Street, and they're getting no attention from the retail investor because people don't know about them. We may not know about the 175 million market cap company that's generating 30, 40 million in cash. I would say my advice in that sense would be look for companies that are financially sound, fundamentally have a great vision and a game plan, a strong management team, and that's regardless of the market cap. But that's going to help you get through this environment is picking strong stocks like that. Um, with respect to the rates, that's a whole other topic, and we can talk about that one later. But most importantly, I'd say there are opportunities in small cap, but there's probably opportunities across market caps right now, given the volatility in the market.
Yeah, too often small cap is in fact treated as high risk, but I love your approach because it does underscore the calculated opportunity within strategic sectors, right? So let's chat scaling a vision post acquisition. So mergers often bring turbulence, but they also bring opportunity, right? Roth's acquisition of MKM Partners last year was a strategic move that merged institutional research strength with Roth's transactional DNA, basically integrating leadership and legacy. And I'm sure that wasn't easy. So how have you approached post-acquisition integration? What lessons have you learned from blending two distinct firm cultures into one unified vision?
Yeah, it's great. So, one of the things you want to do, I think any great company, the employees can sell a platform and tell a story. So, did our story get better with this acquisition? I think that did happen. The other thing is we took two components of businesses on Wall Street. One was an investment bank, one was a trading firm, and we put them together. So, thankfully, each side was very additive. And I think on every metric you look at for the combined company is stronger than the sum of the parts individually. So, I am really happy with the way that went. Integration, and merging two companies, it's never easy. It's the things you don't think about, everything from back office functions to payroll to benefits, things like that. However, I do think that every employee was able to, one, learn about a business line that they may not have known about. You have more colleagues, you have more offices, you have greater infrastructure, and we have stronger opportunities and greater opportunities for expansion around the globe.
And that seamless integration is rare, but your emphasis on people first leadership and operational alignment, that is what sets a gold standard for how firms should really approach M&A, right?
I would say one of the things on that note is that, it's funny, in this business, it's human capital. And what we've noticed is whenever things get volatile, the idea of having a human behind the phone and not a bot behind the phone has actually been something we truly believe in, and we see it all day, every day in periods of volatility. So when people ask me about AI and the ways that we can use AI will certainly help our business, but it doesn't change the fact that when a stock drops dramatically and a hedge fund or mutual fund calls us, they want to talk to a human being. So our business model continues to get validated when there's periods of volatility.
Nice.
So we're excited.
Nice. That mindset, that CEO mindset. So let's talk about what keeps you sharp. There's no playbook for being a CEO, especially not in modern capital markets. And your job requires vision, it requires energy, and really the ability to see 10 steps ahead. But with so much noise, staying sharp is a full-time job. So what daily habits or rituals or mindsets do you rely on to maintain clarity and stay ahead of trends and lead from the front?
It's actually being around people. And quite frankly, the best ideas come from when we're all together in a room, and you can't replicate that in any other environment. So New York City back to office culture is something that really exists. And I'd say the amount of market intelligence that I receive just by going into the office every day, despite all this volatility, I don't know if I'd have that same information if I was sitting at home right now. So it helps. But it's also just great lifestyle choices. Are you working out in the morning or in the afternoon? Are you reading a lot? Are you getting a good understanding of the headlines? Am I picking up the phone if I can't interact with people to get people's thoughts on the markets and what's the feeling? What's the sentiment out there? Those things you cannot dismiss that human to human interaction. But it's also technology. Are you using technology to get information to help you? And that's one thing when we were talking about the retail investor earlier, there's just so much information out there in the markets, but I would just say turn it on and take a passion in it, meaning read it and enjoy it. Not everything is going to be valuable, but for us, the technology is almost connecting us a little bit better. So we use chat systems. It's almost like it's a more modern version of AOL Instant Messenger from back in the day. And believe it or not, something as simple as a chat room with a lot of our employees in it, that information that we get from that chat room on what the clients are saying, what's happening, is anybody picking up any tidbits? Is anybody seeing a trend? That is invaluable in this environment. So I'd say, God bless social media in that sense, that it's made retail investors smarter. And quite frankly, for some of us, it makes us smarter. There's a lot of noise in there as well. But I'm just saying that there are technology platforms out there that actually give us a lot of information that can help us.
Wow.
Regardless of the
That's
environment.
great insight.
Yeah.
Well, we are officially out of time. Thank you for sharing your insights and leadership. I mean, your ability to translate complex markets into actionable vision is exactly what makes you a standout CEO in the financial world.
Really appreciate the kind words. It's an honor to be here, and thank you so much. And you have that high energy as well. We could use people like you on Wall Street, so knock on Roth's door anytime.
That's it for this week's WOR Spotlight on the Expert on the Microphone series. You've been listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. You can definitely check out Roth directly on LinkedIn at Roth Capital Partners, and you could follow Sagar directly at LinkedIn at Sagar Sheth, SagarSheth. We'll be right back after this.